According to the Toronto Regional Real Estate Board, the Greater Toronto Area is likely to see a gradual uptick in home sales in the second half of this year, supported perhaps by relief on interest rates. OK, we'll see. And a resilient labour market. Also, of course, record immigration. Let's get more, though, from Sean Humphries, mortgage broker at Dominion Lending Centres. Sean, thanks very much for giving us the time.
Yeah, thanks so much for having me on. Certainly a lot of movement with those job numbers that came out this month that, well, maybe we're not as fully on board with holding interest rates.
Yeah, that's the big question as well. It's great to get your perspective because, of course, you're not involved in selling real estate. You make money brokering loans or obtaining loans for people. Tell us, what is the feeling in the Toronto housing market right now? Is there any sense in which people are nearing panic? Are they nervous about an abrupt fall in prices?
I don't get the sense that anybody's nervous about a fall in prices. I'm sure there's a segment of the market that is considering that, where, you know, the market's going to fall and maybe some people are on the sidelines. I always find that there's a group of people that are waiting for the market to correct. I think we've had that correction. I don't think we're going to see a massive decrease in prices at any point. And we're you know, the numbers are starting to show, you know, some more you know, multiple bid situations happening, which I think supports higher prices going forward. That's
interesting. But of course, a whole lot of people are going to have to be renewing their fixed mortgages at a much higher rate, aren't they, over the next few years?
Yeah, over the next few years, I think we'll see that. But I think it's a testament of the stress test has been put in for a number of years. People have been qualifying at rates similar to what they're paying now. So, you know, nobody should be in a position where they're not able to qualify. I mean, you know, people are qualifying last year at 5.25%. You know, a lot of renewal rates are in that range. So it's not like people have been qualifying at 2% and all of a sudden they're going to have to, you know, pay an interest rate that they're not qualified to pay. So I think that we'll have certainly a number of people that are in different financial situations that aren't able to handle the payment, but there's solutions for those people as well.
As a mortgage broker, you must have seen this big rise in variable rate mortgages in recent years. Why not? The rates were so low, but now they're much higher. Are people tending to switch back to fixed term mortgages or fixed mortgages?
Yeah, no, fixed term mortgages. I mean, the variables were the belle of the ball for a long time. And now people are looking at the fixed rates as, well, you know, the advice I'm giving is that those 5-year fixed rates, that seems high, you know, but the variable is, you know, 1% higher than that. So I'm having a lot of people are really shying away from locking into a variable rate at such a high rate, and maybe considering some of our 2 or 3 year term fixed rates that are much lower or in range with what the 5-year fixed rates are.
Oh, so you can get say a 3-year fixed term and it's substantially cheaper than the 5-year right now?
The 5-year is cheaper than the 3-year, but the variable rate is much higher. The comparative 5-year variable rate is higher than what the 5-year fixed rate would be. So rather than locking into a fixed rate for 5 years, that is, you know, a lot higher than what our fixed rates have been like, people are looking at some of those shorter term 2 or 3 year fixed rates.
Oh, as a kind of holding pattern, and then they're hoping that the variable rate will have come down after 3 years, for example.
Yeah, that's right. So they're looking at that 2 or 3 year fix, and let's wait and see what happens, and just, you know, why lock in for 5 years when we can look at a shorter term, and then, you know, let's pick up the pieces then and take a look at what the options are at that point. Maybe it's another 2-year term or 3-year term. Maybe the variables look better at that point. So.
Now, I know when we talk about an average price in a market, it is misleading. There's such a vast variety of homes.
Right.
But we're looking here at the outlook from TRREB. So they see the average price this year lower than last year. So is it and these are annual averages. Is there any possibility that we push to record highs in the Toronto area again this year, do you think?
I think we'll approach highs. I don't think we'll be back, across the board. I don't think we'll be back to the highs that we saw in 2021. The market throughout 2022 is decelerating. And so we saw over the course of the year, the average price was falling. Versus this year, it seems like we're starting to pick up steam a little bit more. And so, at the beginning of the year, I think we're in a good spot. People are looking at with a little bit more confidence in where the interest rates are now. And I think we can see that interest rates being stable will allow prices to continue to rise. I think that we go above what TRREB is predicting here at 1.14, but I don't think that we're much above that. I think that that's a pretty good number, and maybe 1.18 of what we did a year ago or 2 years ago might be possible as well.
And just finally on condos, they're still building them in Toronto, vast supply. Is there any sign of a bubble or a glut of unsold condos right now?
Well, we're expecting about, the number is about 30,000 new units to come to market in 2023. And so with that, I can see that investors might get off their position. They might decide to sell as interest rates are higher. The cost to carry the mortgage is a lot higher. Couple that with maintenance fees and taxes and the rents not covering all those costs, I can see some investors starting to get off that position. But with our immigration being so strong, I think that we're going to have all that supply quickly eaten up. We're very short on supply as it is. So as some of those units come to market, I don't think that there's a big enough glut of them that we're going to have an issue with it being absorbed by the market.